Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting Asian Session Live Market Analysis for this week, 8th to 12th of July. So today is 8th July. Between 5 and 5:30 GMT, I'll be explaining the expected market moves for this particular week and also try to do the market reading for today and explain to you what could be the possible moves in the case of the majors and the commodity pairs during this particular week. So let me explain the derived forecast. So it is derived statistically and the forecast is given in the next page, and you will be able to see the expected market moves for 3 different sessions for this particular week, 8th to 12th of July, and it is the second week of the month. So upward trending move is expected, and last week that was the beginning of the month and also the beginning of the third quarter. So beginning of the third quarter they made the downward move in the case of Euro and GBP and upward move in the case of USD and USD CHF, and that has given the market sentiment, namely the USD gaining move could be expected further, or they created the bearish feel in the case of other majors. So afterwards what they are expected to do, so normally from second week of the month they do the week beginning false move to start with, then followed by that of the opposite move, what the sentiment they created in the month beginning. So now today swing and firm up moves are expected in the case of Euro and GBP. At the moment if you see them, they are holding with negative net change in the case of Euro by about 22 pips and GBP about 22 pips and Yen about 8 pips positive net change, USD CHF by 30 pips positive net change, and Canadian dollar by 12 pips positive net change, Australian dollar by 15 pips negative net change. So the numerators are showing the negative net changes and the denominators are showing positive net changes, indicating that they are making the USD gaining move to start with in this particular session. So during the Japanese session they are expected to swing briefly like this and slowly firm up the numerators. After gaining the levels in the case of denominators, they are expected to gain the levels holding the denominators. They are expected to gain the levels in the case of numerators. Then they are expected to slowly swing and show positive net change in all currencies during that of the European session. Then during the US session they are expected to gain both in the numerator as well as the denominator currencies the gaining moves. So that will show the gaining in the case of the respective crosses of the majors and the commodity pairs. So today week beginning false move could be restricted to that of the Japanese session and that of the European session. Followed by that they could gain the levels in the case of US session. So we could see the gaining of the levels in the case of the numerator currencies Euro, GBP and Australian dollar visibly during that of the US session. Then tomorrow 9th they are expected to make a brief dip during start of the day and make a visible rise, then swing and rise during that of the European session. Then a dip followed by that of rise is expected during that of the US session tomorrow. Then 10th of July, swing and rise could be seen in the Japanese session and the dip and rise during that of the European session and swing and rise during that of the US session. From there onwards, people might change the opinion with regard to the bearish moves in the case of the numerator currencies and people could turn bullish. Then they are expected to make a dip and quick rise during that of the Thursday, and swing and rise and dip and rise are expected during that of Thursday during European and US sessions. Then on Friday swing and rise, swing and rise, swing and rise, and they could make the intentional upward move in the case of Euro, GBP and Australian dollar, and also in the case of USD Yen and USD CHF and Canadian dollar alternatively. As a result, you will come across the more gaining moves could be seen in all currencies during this particular week. The next week again, the trending move, third week of the month, the upward trending move is expected from 15th to 19th of July. So, you could come across briefly the week beginning false move during that of the Japanese and the European session, followed by that you could find good gaining moves in the case of numerator as well as the denominator currencies. So, what you could understand that the players create the market sentiments and act against that of the traders. One of the trigger they used, namely the non-farm payroll last week. Besides, they also used the ECB and BOE ECB press conference and also the BOE interest rate decisions. And during the BOE interest rate decision on Thursday, as I explained, that they said that nothing visible is happening. So even though it was unchanged, they said nothing visibly happening. They are not tightening that of the liberal policy. So immediately they dropped GBP, and followed by that of the ECB press conference, they dropped euro also. Then Friday, I was expecting for the non-farm payroll, the market to go up, but they made the drop after the non-farm payroll because the number was good, and they made the drop, and they held the levels after dropping about 100 pips. They started holding the levels in the case of euro and GBP, and they gained substantially in the case of USD and USD CHF. And these, and also nominally in the case of USD CAD. And those gains, they are not going to lose it in this particular week. Instead, they are expected to gain the levels in the case of Euro, GBP and Australian dollar, and that may change the market perception during this particular week. So be careful while trading. Don't become bullish or bearish, and they are going to alternatively gain the levels in the case of the denominator currencies followed by that of the numerator currencies. So overall, they are expected to gain the levels, and it may appear that when the entire market is feeling bearish and I am the only person giving the bullish call, so it might give the different opinion to you, but you can objectively watch and find out what the players could do it. And the expected range in this particular week, and last week I gave that 1.2950 as the expected low, but they dropped it to 1.28 area, and 1.2810 is currently the low, and they are expected to gain the levels from these levels. And similarly in the case of GBP, 1.4850 could be the low, and they could gain the levels to 1.5375. And last week they went up to 101.50, the expected high from that of 98.50 range, and now the low is 101.10. They might do a downward stoppant to 100.50 and then quickly gain the levels to 103.50. And last week I gave the high as 0.9675. They went up to that level, and this week they could come down to 95.50. Currently the low is 96.50. They could drop another 100 pips from there and quickly gain the levels, and suddenly you could come across the gaining of the levels in the case of USD CHF in this particular week. They may show 99.50 level suddenly. Similar to that of the gaining moves in the case of USD Yen, they could suddenly gain the levels in the case of USD CHF using some trigger in this particular week. Then USD CAD, last week I was expecting 1.06 level, and they went up to 1.06 as such, and this week they could come down to 1.0550 from the current level. So 0.573 is the low, and they could just show 0.575 and briefly below that another 25 pips, and later on gain the levels to 1.0850 range. Australian dollar 0.9050 could be the low, and 0.9042 they have shown it, and from here they are expected to gain the levels to 93.75. So the downside is much limited in the case of Euro, GBP and Australian dollar. They could make below that of the current low the downward stop in the case of USDN and USD CHF, and also in the case of Canadian dollar by 25 pips or 50 pips, and later on start gaining the levels as well. So this is being recorded, so you can still note down the levels and finally find out what could happen to the market during the course of this particular week. Then with regard to the initial lows and the highs set around 3:30 GMT for market reading purpose. So I noted down the initial lows and the highs in the case of all the four majors and two commodity pairs. Now let us compare it with that of the current market level 5:10 GMT. 1.2812, they set the low, they have not breached it. 1.2833 is the high, that is also not breached. So you find about 21 pips swing is seen between the initial low and the high in the case of Euro. So they intend to break the high slowly. And GBP 458 is the low, which is also not breached. 1.4894 is the high, which is also not breached. So you can find a narrow range consolidation is happening in the case of Euro and GBP. And in the case of USD Yen, 101.09 is the low, 101.53 is the high. They are holding it closer to that of the low currently, and they are expected to breach, as I explained, that they could make a downward stop and afterwards make the gaining moves. In the case of CHF, 0.9650 is the low, 0.9667 was the initial high, and they just breached it by 1 pip. 9668 has become the high. Slowly they intend to gain the levels, and you would have noticed that USD CHF was is currently showing 23 pips positive net change, and they went up to 30 pips positive net change when Euro was showing about 20 pips positive net change. So quickly they wanted to gain the levels in the case of USD CHF. From there they may make a dip and again start gaining the levels. Then USD CAD, 1.0573 is the low. They have not breached it. 1.0584 was the initial high. They breached it by 2 pips. 1.0586 has become the new high. So here again they just breached the high. So they could gain the levels again in the case of USD CAD initially, followed by that of the gains during that of the US session, or from late European session they could gain the levels in the case of numerator and currencies. Till such time they could gain the levels in the case of denominator. There again you come across a contrarian move. USDN is making a dip. Along with that of Euro and GBP is a contrarian move. Slowly they are handling on the downside. They uncrosses before making the rise. And in the case of Australian dollar, 0.9042 is the low, 0.9068 is a high. They are making the narrow range consolidation without breaching the initial high and the low. And they are expected to slowly gain the levels from here in the case of Australian dollar to 93-94 area during this particular week. So when they have not breached the low or the high in the case of Euro and GBP, and only in the case of denominator USD CHF they breached the high, USD CAD they breached the high, indicating that they intend to gain the levels in the case of these two denominator currencies, USD CHF and USD CAD to start with. And they could make a contrarian move in the case of USDN, make a slide. So they cut the initial high, 101.09 was the initial low, and they are expected to breach. They are already breached it by 1 pip, and they could make for the downward move and probably take out the stops below that of 101. And then start gaining the levels in the case of USD-Yen. So they intend to make the contrarian move during that of the week beginning false move at the current moment. So carefully watch, and whenever they are making a downward stop, and you can try to take the buy positions. In the case of Euro and GBP, you can take the buy positions and keep 30 pips hedge order to limit the risk, and once the position makes profit, keep stop at entry. And from this week onwards, you can do the position trade in the case of the numerators as well as the denominators, but don't try to go in for a breakout trade. Let them break the high and stay above, then try to take a buy. In that case, you try to book profit immediately in the same session or in that particular day. But if you do position trade, try to buy when they are making a downward stop in all these currencies. Once they stop cutting the new low for 30 minutes, take a buy. Then you will be able to keep stop entry and try to maximize the profit during the gaining moves in this particular week. But as I given the range in the case of the numerators as well as the denominator currencies, you try to make the buy when they are making about 50 to 60 pips downward stop in the case of the denominator currencies while taking buy positions. Numerators, current levels, when they are close to low, not breach the low, you can take the buy. Keep 30 pips hedge order as our trading strategy. And once the position makes profit, you can try to keep stop at entry and trail this stop in profit making position. Keep about 45 to 75 pips limit and try to see that the trailing stop is not hit. Then in that case, you can move the limit away from that of the market. Thereby you can maximize the profit and make it as a position trade. So the entry and the exit you have to watch. You should not give chances. While making an entry, try to keep about 10 pips below that of the market. You buy order and see whether it is getting filled for in 30 minutes time frame. If it is not filled during early or the late session, then you try to buy it at the market and keep 30 pips from there, the hedge order to limit the risk. And once the position makes profit, you try to keep stop at entry and then maximize the profit. So you have to take a decision with regard to the entry and the exit appropriately. And at the time of exit in profit making position, once the position makes about 25 to 30 pips profit, keep stop at entry. If you fail to do that, then probably out of greed you might avoid keeping a stop, and suddenly they may reverse the market and you may get caught. So don't take such chances in the market, and if you are stopped out, you will have a better entry level at a lower level, and that will be a good trading practice rather than simply hold a loss making position for several days. Avoid doing it. Then another important things to remember, namely each session is subdivided into 3 sessions, early, mid and late sessions. So first 1.5 hours during the start of the session timings are here. 0030 to 7 GMT is the Japanese session, 7:30 to 13 GMT is the European session, 13:30 to 20:30 is the US session. So 1.5 hours from the start of the session is early session, and 1.5 hours towards close of the session is the late session. In between is the mid session, and 30 minutes gap between the session is the gap time. So you have to understand what sort of moves they are doing it during different time frame using the GMT time given in this live market code page. So currently we are in the middle level. From 5:30 onwards the late session will start, and they are not breached the low. So late session they are expected to form up in the case of the numerator currencies. And in the case of USDN, they made a downward stop and they come up to that of the initial low, now 101.09. They don't breach and stay above there for 30 minutes. That means they will make an extended downward move in the case of USDN for 2 hours. Afterwards you can take a buy position. Then after 2 hours, then it will be the gap time. So during that of the European session, you can try to see that they are making a downward stop below 101, and then afterwards watch and try to take the buy positions. And in the case of numerators, in the case of USD CHF and USD CAD, they are simply currently showing the upward move. So wait for them to do the downward stop, and at that time try to take the buy position. Euro and GBP, when they are closer to low, you can take a buy position, and also in the case of Australian dollar. So this is how you have to take the entry time, namely the early and the late sessions, and also the entry levels near that of the low, so that the chances of that hedging order getting hit will be less. If you simply take the position and keep hedge order and ask me, I am frequently hedged, what do I do? In such a scenario, then if it is hedged for 2 times, watch for 2 hours. That means you have not followed the market moves, the type of moves, and simply entered into the market. Then if the hedging is 2 times, if they are hedged, you wait for 2 hours, you will be able to keep stop at entry or close the hedging with a profit. Then later on keep another hedging order below that, then they will start making the gaining moves. So you have to calmly wait and handle the hedging. Then you will find the hedging is not a constraint at all. It gives a great market insight and also the understanding of the market, rather than simply presuming that the hedging is really troublesome. So don't think that hedging is a real trouble or it is making you to get trapped with the position instead of stopping it out. So when you use the stop, you accept the loss instantaneously and review the market to re-enter. But when you accept the loss immediately, your mind becomes defensive. You will not be in a position to re-enter in 30 minutes time frame. Whereas if you use the hedging order, you still participate in the market by keeping the positions, and those positions will give you the insight whether the market is expected to go up or come down, because you tend to watch the moves carefully besides the live market quote page, and also compare it with that of your holding positions. Then if you handle the positions carefully by closing the hedge order, you will be able to continue to make the profit in the buy position. If you use the hedging, see, like last week, if the hedging is making profit and the original position entry is not making profit for 30 minutes to 2 hours, you can simply close the buy position and maximize the profit on the sell side. That way also you can trade. So to reverse the trade, the hedging helps to a greater extent. But only thing is, you have to take the appropriate time, appropriate understanding of the market by following the type of moves. How they are making the move near that of the low, near that of the high are very important. And when they continue to breach the low and stay below that of the low, initial low for more than 30 minutes, you have to understand they are making that extended move. There is no point in closing the hedging, or there is no point in taking a buy at that time. So this sort of understanding is very essential for you to perfect your entry and the exit. And simply if you follow something else like the chart pattern and try to enter and later on say that the hedging is useless, that means you are not used the hedging appropriately. Then definitely the hedging will not give you a perfect understanding of the market, and also it may appear troublesome because you want to make an impulsive trading. The hedging is making you to be a calm trader, and if you want to be an impulsive trader, then hedging will look like a constraint. So that is how people view hedging, is a constraint. Otherwise, it is a great tool to limit the risk and maximize the profit. It helps in a greater way the money management technique, especially like their data release time, like non-farm payroll or ECB and BOE press conference, etc. ECB interest, BOE interest rate decision and ECB press conference, they make quick moves. So if you don't use the hedging, and the players play a trick in the market by simply using an all or none order, so that it won't fill any of the buy, but it will only fill the stops. Then you will really find your reasonable margin is eroded to a greater extent. Instead, if you use the hedging, it will appear like a stop for that of the system, so automatically it will fill. But even though they fill it, you will only be hedged, but you will not be stopped out. That is the advantage of using hedging in the event of the platform trying to play a trick against you. So follow the time, follow the net change, and also follow the spread is good between the initial low and the high, more than 40 pips the spread if they make, then you try to enter. Like USD yen, they made about 40 pips and more. Then you try to enter, you will be able to really make some good swing trade. If you simply choose a currency which is making a narrow range consolidation, then you will be simply holding the position. There may not be any profit booking opportunity. Then similarly exit when they just form the new high and stop cutting the new high for more than 30 minutes. Try to close it. And if the trailing stop is not hit, you can move the limit away from that of the market, and when they form the new high, watch for 30 minutes. If they don't cut the new high, then tighten the trailing stop. If they don't hit your trailing stop, then you just wait for 2 hours. Then they could make an quick upward jump. At that time, you can close manually the position. This sort of decisions are very important to maximize the profit in a profit-making position. See, when the position is making loss, you have to handle it using a contingency plan of the hedge. Now USD yen, they've gone above that of the initial high. See whether they are staying above for 30 minutes. Then you can take a buy. So this sort of understanding is very important in the live market analysis. Use the live market quote page as the simple tool for your market understanding, rather than doing in-depth analysis of the market, using various types of tools and various technical studies and various fundamental studies. Ultimately, those things can give 100% result, fine. If they can give only 70% result, then you have to necessarily use the stop. Instead, you make your market trading simple, use the same trading strategy so that you will be able to quickly enter and exit in the market whenever you find safe trading opportunities. And try to make your trading a leisurely trading rather than a stressful instance. So if there are questions, I am willing to answer to those questions. Okay, no question is asked at the moment. So let me briefly explain the expected market moves for this particular week. So swing and firm up during that of Japanese session. Then afterwards they are expected to make nominal swings, and swing and rise could be seen during US session. That could be the week beginning false move, since it is second week of the month. Then tomorrow, dip and rise, swing and rise, dip and rise are the type of moves expected during different sessions, 3 different sessions. Then 10th, swing and rise, dip and rise, swing and rise are the expected market moves. Then 11th onwards, they are expected to make quick rise moves from start of the Japanese session after making a brief dip. Then swing and rise could be visible rise. Again 12th, they could make visible rise. Then RD has got a question here. If the numerators and the denominator currencies gain the levels this week, does it mean it will be contrarian move? Yes. Alternatively, they will gain the levels in the case of denominators to start with, and then the numerator currencies. It will be the contrarian move. Only then they will be able to gain the levels in the case of the respective crosses of the numerators as well as the denominator currencies. Then JS has got a question. USD INR forecast. USD INR has weakened and breached the psychological level 60, and it is expected to slowly, INR is expected to strengthen in the third quarter from that of 60 level it could come to 50 and below in the process. Then GS, how much more it can depreciation? The depreciation could be limited in USD INR. Then with regard to the range, so current low could be the low in Euro and GBP and also Australian dollar, and in the case of the denominator currencies USD yen, they could make a downward move below 101, downward move in the case of USD CHF by about 50 to 100 pips, and in the case of Canadian dollar by about 25 pips as the downward move. Then later on they are expected to reach the highs in this particular week. Then I explain to you how exactly the market reading and trading strategies are to be used to fine tune your entry and exit and market timings in a market reading, and the net changes help you a great extent in determining the exit and the entry level. And similarly with regard to the exit, if they make 150 pips net change level, then your exit has to be initiated. There's no point in simply holding it and trying to see that they could make further drop the gain, and you have to watch carefully but use the trailing stop to maximize the profit at that time. Then Martin. Dip means how many pips? Yeah, dip could be for about 15 to 25 pips. Then drop means about 60, 75 pips. So I take this opportunity, thank FX Trade for the valuable time they are given, slot they are given for me to present the webinar, and thank you all for your attendance and also listening to my webinar. And this is being recorded. You can just go through this again if you want and refer it on a daily basis to find out the expected market moves. And on Thursday, 11th of July, I'll come back and review the forecast and also my market reading and try to highlight you wherever it has gone wrong, wherever it has gone right. And also I'll try to give the expected market moves for Thursday and Friday and fine tune it using the market reading technique and explain to you what could be the type of moves we could see it during this weekend. So wish you all very happy trading and great profit booking opportunities, and any highlights I'll display it in the blog iknowindices.com/blog and also fxtrade.net, the highlights with regard to the market moves. And anytime you can contact me through email dr@i-knowindices.com for any of the specific queries and replies. So thank you one and all. See you on Thursday.